Hello, YouTube. The stock market is struggling for direction. We are currently set to close the week out green, but we are below last week's high. We are near the low of the week, printing a new low today. So we're going to talk about exactly what to do as the market now starts resuming lower. And as a recap from yesterday, it has a lot to do with Bruce Lee and telling us to be shapeless and formless like water. So if we bring back all of our lines, I think the question going into this weekend is this trapped bull volume? Meaning, because we have a shooting star or an inverted hammer, and we think about what progress we have made coming off our all-time high. Every time we have hit this bear market downtrend, we have rejected or sold off. So now as we look to this most recent period, what do we note? Well, if we go to hollow candles for a moment here, we note that we got over it. We back tested it once and bounced. A dead cat bounce. Now we come back below, but we have mostly hollow candles below, which means they are bidding it up during the day. And there is just a dramatic push pull happening. So I think what we want to do right now is to be mindful that if we want to be like water, a cup, a bottle, or a teapot, we got to be mindful that we got to choose what team we want to play on. And then just make sure that we do not deviate from that. If you want to be bullish, there are names that are bullish. Like this week, we have Google up 4, Walmart up 3, Apple up, Nvidia up, Microsoft up. If you're on Team Bear, pick banks, pick transportations, pick industrials, pick Amazon. Just make sure you know what team you want to play on, and then understand at what point you are wrong. So if you're on Team Bull, if we are on the daily chart and we are over the downtrend, but we are below the 200 DMA and we are below the 50 DMA, we are below the short-term price and currently battling for the long-term price. So if you want to be long-term bullish and we're below the long-term price, what does that mean? Well, there's a disconnect between what you can get from the market and what you are expecting. Same thing can happen on QQQ here, where QQQ has been really strong. We have another inside bar, I believe. Lower low today, but it's mostly an inside bar. We have our W complete. And just understand, well, if you're bullish on tech, at what point are you wrong? It is over both averages with a nice bounce, and it is currently leading right now. As we look here to our weekly chart, here's the part the bulls want to be mindful of. We are set to close up by about 1% on the week. We are still over 305. We have made progress over 315, which is a huge area on our annual chart. We have a head and shoulders we were looking at here. And as we hide everything, we note that 314.69 is the 2020 high. And this week we printed a new high at 315.25. So we are starting to invalidate that annual time frame chart. The question is whether or not we're going to close over last week's high at 309.15 or roughly $1 higher. Otherwise, that is a failed breakout, but we are above the previous weekly high. We do have bull volume ramping up. And again, technology is what is leading the market higher right now. What is not leading the market, and what we touched on yesterday, was banks. So we look here to regional banks. We note that, okay, well, looking at the hollow candles, we have a gap down and a pump up to a marginally green day so far. Is this just them smoothing out the options? Are we going to get more bullish volume continuation? Or is this it? We're going to start flatlining here. Remember, charts can do three things. They can go sideways, they can go down, they can go sideways again, or they can start going back up. So are we going to go sideways for longer? Are we going to go sideways then up? Or are we going to go sideways then down? And that's important because just overnight, as I mentioned yesterday, the recession now seems a lot more inevitable. And we hear about Deutsche Bank, which is a German bank, not doing so hot. So this right here has the gap down pump up with the bullish volume. It's starting to fill the gap, but it's not yet confirmed. So there is definitely more potential fallout out there, including real estate, including things like commercial real estate, personal real estate. There could also be contagion for other banks and a lot of other things we just cannot be fully prepared for. So next week, there are going to be hearings on SVB. There's going to be Barr from the Fed giving testimony on supervision. And I think that is going to be a large focus for us. A few more quick things for us to look at here are just going to be weekly candle closes. And we can look here to the DXY. And actually, before I forget, I'm going to ask you for a favor, please, and thank you to smash that thumbs up and consider subscribing to the channel if you're enjoying the content. Thank you so much ahead of time. Looking here to the dollar, we are set to close out marginally red, which means that it makes sense that the S&P and the NASDAQ are up a little bit because the dollar is down. We got a hammer forming. We did lose our uptrend, so it's bounced off this area of every previous time before. Now it's not. If we are able to reclaim last week's low at about 103.44 or about 40 cents higher into the close, that could lead to some continuation. I just think that with the Fed kind of done hiking, I think we're probably done on the dollar being king, which is this high we set up over here over 110. VIX is elevated, but it is closing red on a weekly time frame. So we're back above our 200 weekly. We're below our 50 weekly. We are red by about 9% on the week, which means people are less scared this week than last week. Massive range on the week, though, from about 19 to about 29. That is about a 10-point swing, 10-point swing. 2-year note coming down. It's on the 50 here. It's down by about 2.4 on the week. Also lost its uptrend. 10-year note, same thing right here on its 50 weekly. And it's not sure what it's doing. It's definitely going sideways here. Looking at a few more quick charts, what do we got? Inversion down, actually flat. So just a little bit down versus last week. If we look to gold, man, it's been pumping this week. Pumping, right? Bounced off 1920 key support area. It's battling for 2000. It looks strong. We looked at crypto. Crypto looks very similar, but it's marginally red on the week here at about 28K. ETH, marginally red by about 1%. So people are definitely fleeing the things they perceive to be risky and going into the things they perceive to be safe. What is King Apple doing? Well, as you can note here, we have a key relative resistance area at about 158, 159, and it's poking over it. Is Apple still the leader? Is Apple still going to drag us higher? And can it do it as the rest of the market is looking soft and it wants to fade? Volume is dropping off, and we have to be mindful of the king. Looking to Microsoft, hey, that looks fine. Inside bar. Looking here to Google, powering up over its 50 weekly. We look here to Amazon. Man, this pattern's not very obvious anymore. No longer trending up. The falling wedge breakout is broken. We do have a micro inverse head and shoulders, but it's not really an inverse head and shoulders. It's just sloppy. Battling for $100. And then we got Nvidia. Man, just continues to power up. Even Kramer couldn't take it down. He's like, I like the stock. It's up. Cool. Then we'll look here to Tesla. Tesla's up on the week by about 5%. What's really interesting, too, is that NVIDIA is actually now a larger market cap than Tesla. So chips are more important than EVs, at least for now. And with that said, we're going to encourage you to come hang out with us on the end of day stream if you want. If not, we look forward to seeing you on the weekend for our normal schedule upload. Thank you so much for supporting our channel. I look forward to seeing you on the next video. Thank you.